Well, I'm glad to have you join us as we will be exploring the recent financial results of three leading players in Nigeria's cement industry: BUA Cement, Lafarge Africa, and Dangote Cement. Well, joining me for more on this, I have with me Tajudeen Ibrahim, Director, Research and Strategy, Chapel Hill Denham Securities. Thank you so much for joining me today.
Thank you for having me on the show, Perfection.
All right, now before we get into the results, I would like us to listen to this. That's the Group Chairman of NGX Group, Dr. Umar Kwaranga. He has something to say.
At the end of the day, today we may have 64 trillion naira market cap. Our target for this year has been supported by the DG of SEC is 100 trillion naira market cap at the end of this year.
Well, there you have it. I guess you're still with me. So he said he's looking forward, not necessarily looking forward to the target for the NGX market cap this year is 100 trillion naira. Do you see that happening, and how?
Yes, I believe that we can have 100 trillion naira market capitalization by the end of this year. Because if you look at last year, the Nigerian market grew by about 53% last year to get to around a little above 62 trillion naira by market capitalization. So now, hoping for the market to close at about 100 trillion naira in 2025, to my mind, is achievable, because what it implies is that, the market will be expecting growth rate of about 60% in market capitalization to hit that number. And I say that it is achievable because of, number one, the fact that we have the banking sector still undergoing recapitalization. So we are going to see, an increase in the market capitalization on the back of banking sector recapitalization exercise. Number two, we are going to see more listings on the exchange, and that will also add to the market cap. The third element is share price movement. We have our target that the market most likely will return about 38% this year. So if you combine all of these elements, you will realize that achieving 100 trillion naira market cap by the end of this year is indeed achievable by the market. And I think, if we view the market capitalization in US dollars, what we realize is that the Nigerian market is still small at about $65 billion if you look at market cap in dollars. And what that simply implies is that Nigeria still has a lot of potential in terms of growth opportunities for the market, because we are still much smaller than the South African stock market, for instance. And so 100 trillion naira, to my mind, is achievable this year, because we just need the market to grow by not more than like 60%.
All right. So what's the impact or the implication, let's say the economic implication of, a grown market capitalization to the tune of 100 trillion naira? I mean, what does it mean at the end of the day for the economy, the real sector, if I may add that?
It is positive for the economy, because what is number one, signals is that it indicates that Nigeria's market is, a lot bigger. And then when you have a larger market, what it implies is that the companies in the economy can raise capital via the stock market, because the stock market is now larger. Number two, it sends a positive signal to foreign investors around the size also, of the market, because foreign investors like to play in a big market, because when you convert our 100 trillion naira to US dollars, what you get is about $65 billion, which I think is a positive thing, and much higher than the dollar value of the market last year. So broadly speaking, it will encourage more companies to want to raise capital via the stock market, and the more capital that companies have access to, the better for their businesses in terms of funding, be better for their businesses in terms of expansion, of production capacity, for instance. So I believe that, it is positive for the economy in those regards.
All right, let's close this particular segment with this. Looking at the monetary policy trajectory for 2025, is it supportive of, more growth for the NGX market capitalization?
So if we bring in monetary policy here, and I do hope that is what you mean, monetary policy this year most likely, will be dovish because we have seen inflation sort of, come down post rebasing. And as we speak, we have real monetary policy rates with the policy rates being higher than the inflation rate of 24.48%. But the reality is that treasury bills and also commercial papers, both of which are short-dated instruments, as well as OMO securities, all of those instruments are below the interest rate as we speak in terms of the yield. They are below the policy rate, number one. At the same time, they are below inflation rates. And being below inflation rate means that you have negative real yields. But the good thing about it also is that when you have a lower interest rate, it implies that companies are now able to borrow at a much lower cost compared to previously. When you borrow at a much lower cost, it is positive for earnings. Since earnings are going to grow faster, it is also positive for the stock market. And if earnings, grow at a much faster pace, it means that there will be much more for companies to distribute to investors in form of dividends. When you see higher dividends, you are emboldened to always want to get capital from the stock market as a company. So the trend we are likely to see in monetary policy decisions over the next couple of months will be favorable to the stock market in my view.
All right, and some of us are also waiting to see if an NPC is going to list anytime soon. I don't know what you think about that. Just in 12 seconds, if you can respond to that.
NPC listing is positive, and it is something that, will materialize as soon as possible. If it does not materialize this year, I think we should expect it to materialize next year. When NNPC, a giant in the oil and gas space, gets listed on the exchange, it will surely bring higher market capitalization and further lift the market cap towards the 100 trillion naira target of the chairman of the NGX board. So I see it as a positive thing. If it does not happen this year, I think next year looks like it.
All right, so let's come to the other part of this conversation, which is the result of cement companies. We're looking at Dangote, BUA, and Lafarge. Now, looking at Dangote Cement, if we can have the results put up there. So I'd like you to talk to us about your general comment on Dangote Cement, just looking at the results while it's being put up.
I think the results are great, considering the fact that we now have a situation where the Nigerian business was very strong, in terms of the volume growth, with 7.9% volume growth in Nigeria, to my mind, is a commendable development for Dangote Cement. And I think it also reflects the strength of the Nigerian economy in a challenging period, because naturally speaking, one would be expecting cement consumption to sort of slow down in a challenging economic environment, but we had about 7.9% growth for Dangote Cement in terms of its volume. The second thing that I think is worthy to mention is that the Pan-African businesses, the other businesses outside of Nigeria, recorded a contraction of 1.1% in volume, and that was largely because of the election in South Africa, number one. Number two, it was also because there was unfavorable weather condition in Ethiopia last year. So that made them to record a decrease of 1.1% in volume in the African market outside of Nigeria. Nevertheless, I reckon that what is positive is that they are going to expand capacity in Ethiopia, for instance, to double the capacity to 5 million metric tons per annum, from the current level. So, and that implies that they are going to have much stronger capacity to take advantage of the demand in cement, cement demand in Ethiopia, and they will also be able to export out of Ethiopia to feed other African markets. So I think investors should watch out for that positive development going forward.
Okay, let me just put this to it. I mean, interest expenses surged 210% year on year, driving net finance cost up 87.5%. Also, gross debt increased by 38.4% to 2.55 trillion naira. I mean, with 1.82 trillion naira added in the full year of financial year 2024. What is the refinancing or deleveraging strategy in 2025? And how sensitive do you think Dangote Cement's debt portfolio is to further rate hikes or monetary policy changes?
I think what most likely we are going to see is some form of refinancing of all of those expensive debts in the balance sheet of Dangote Cement. And I think in fairness to them, the overall economy last year witnessed elevated interest rates because the CBN was tightening monetary policy seriously to combat inflation. So we had not only Dangote Cement, we had many other large corporates, reporting an increase in interest expense because of the high interest rate environment. The second thing is that we also had, dollar devaluation last year. And what currency devaluation I mean? So what currency devaluation last year implies is that any company that had foreign currency debt in its balance sheet would have to convert at much higher rates, and then that will imply that the company really had higher borrowing for the year. But if you strip out the impact of FX, it is likely that those debts didn't really grow that fast. So the summary to my mind is that there is the opportunity for Dangote Cement and other businesses to refinance expensive loans in 2025 when we expect interest rates to moderate.
Okay, now let's do this. I mean, Mr. Tajudeen, let's look at all three, whether it's BUA Cement, Dangote or Lafarge. I'd like you to do some sort of a comparative analysis of all three.
So if you look at Dangote Cement, what we know for sure is that it has the highest capacity and also able to supply almost the entire market. So it is a major advantage for it as a business. And if you take a look at BUA too is competing on the capacity front by increasing production capacity. So we expect BUA to compete favorably with Dangote Cement on that basis. The third player, which is Lafarge Africa, is very small and compared to the first two. But the reality is that Lafarge Africa is also competing favorably using production efficiency to ensure that the cost of production, the expenses that are incurred in their businesses are not rising far too much ahead of revenue generation or revenue growth. So what that implies is that there is some level of efficiency that comes to Lafarge Africa and helps it to increase its EBITDA margin. So,
Mr. Ibrahim? But I think this might as well.
Too much volume growth, but the size of the volume is less compelling compared to Dangote Cement and BUA Cement. But the reality to my mind is that efficiency really matters, in the cement industry. The second thing I would like to touch on is the entrance of new player, where we now have a Chinese company owning Lafarge Africa going forward. What that implies is that sector, we are going to see more competition in terms of production capacity and also in terms of pricing.
Well, we'll keep our eye on that. Thank you so much. Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill Denham Securities. Thank you for your time and thoughts on the show today.
Thank you for having me on the show.